Hey everyone, and welcome back to this brand new video. I'm one of the coaches at Ungar Academy, and since you've often asked us if it's possible to derive the profit and loss value of an open trade, well, today we're going to be taking a look together at how to do that and how to apply those concepts to an automated trading strategy. But before we begin, as always, you know by now, please go and subscribe to our channel. Please click on the notification bell and also, hey, leave us a like to this video too. We thank you so much. Hi, we are the Ungar Academy, and we teach traders how to make money in the markets. Our founder, Andrea Ungar, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks. All right, as mentioned just now, many of our students ask us how to give the machine an order that will only be executed if the current trade loses by a certain amount, for example, or even wins within a certain threshold. And this is where a multi-charts keyword comes in really handy, which is already standard in all platforms and is used to accurately determine the profit or the loss of the current trade, namely the trade that we have open at that moment. As indicated in the Power Language Editor Dictionary, you can refer to this keyword to see exactly what is the behavior of this function. Now we can see that the output is a numeric value, and basically this numeric value will indicate the unrealized profit or loss of our open position, and it's called open position profit, and it's meant to be retrieved this way by simply calling it within a signal. And as a side note, this function can only be used in signals, while it can't be used, for example, in indicators or functions, so it's just available for signals. Open position profit, and here there are also some examples of how it's used. It's said that it will return a value of 0 if at the moment the position is at the level of, if the position is flat. So basically if it's at the parity level, a value of 10 when the open position is at least $10, and this small symbol here represents the currency. And one more example. For example, if we write -5 here, it means that we'll have a loss of at least $5 compared to the entry price. So you see, this function, this keyword, is really very simple to be used in the script of a trading system. Now, this reserved word has several uses. For example, you could check if on a certain day of the week or after a certain number of days on the market, for example, after 3 days on the market, the profit or loss of the open trade corresponds to some parameters we've chosen, so it might be worth closing the position. Another example of use would be to check on Friday, that is on the last day of the trading week, if the profit is at least $1,000, to keep the position open over the week, meaning beyond the end of the week. And the reason for that is that a gain, namely an open profit of at least $1,000, could protect us from any news or market news that may arrive when the markets are still closed. So, in other words, between Saturday and Sunday. So it's, let's say, an additional protection when we go over week. On the other hand, if the trade is negative or at break even, the decision could be made to close the trade on Friday. And this way you wouldn't risk seeing gaps, for example, between Friday's close and then Monday's open. Now we're going to try to see a practical example of quite an old strategy that we've developed for the DAX future, which also leverages this type of indication. Right, and here is our strategy. It's a strategy that we've been using since 2017. It's a basic reversal strategy that buys, so it opens a long position when a false breakout of the previous day's low occurs, and sells, so opens a short position when a false breakout of the previous day's high occurs. So these highs and lows are calculated using the so-called old session of the DAX, namely the one that goes from 8 a.m. to 10 p.m. Frankfurt time. And this is very important because, as you know, the session for this underlying asset was recently extended to the night hours as well. But in this case, we're going to be sticking with the previous version. So the session that starts at 8 a.m. and ends at 10 p.m. So where did we use open position profit in this case? Well, we used it in this variable, the variable called overnight. This is, as mentioned, a strategy that enters both long and short. So in the short trades, they'll always be closed at the end of the day. But what will happen with the long trades? So in case we're in a long position, then the open profit is negative. So if it's less than 0 in this case, that is to say, if at 9 p.m., so an hour before the market closes, our long position is losing, or in any case its open profit is less than 0, what happens? Well, what happens is that this variable will be true. So if we lose, we see it in this line. We won't close at the end of the day, but after 2 days. So we'll keep the trade open beyond the end of the first session, because we've seen that this still brings some pretty interesting benefits to the strategy. On the other hand, if the overnight variable is false, then the trades will be closed intraday, and this applies to both the long and the short trades. And here is our strategy at work. As mentioned earlier, it will enter on false breakouts, so it's a strategy that is based on a reversal approach. However, the peculiarity in this case concerns the exits. So you can see that all of these positive long trades are closed at the end of the day because the open position profit was positive at 9 p.m. when the check takes place. And consequently, it wasn't necessary to hold the position overnight, and we closed it at the end of the day. Here, for example, in this trade, you can see that the strategy had entered a long position. When the check occurred, then in the evening, an hour before the close, the open profit and loss was certainly lower than the entry price, which was about here, while the close was lower, so the open position profit was lower than 0. The strategy kept the position open and closed it only the next day. On the other hand, as you can see, the short trades are always closed at the end of the first trading day. So this is a kind of a management that is a little bit different than the standard management. In this case, unfortunately, well, it didn't pay to keep the position open beyond the end of the day because, as you can see, a stop loss occurred. But in the vast majority of cases, it does pay. If the strategy isn't read at that point at the end of the session, to keep the position open for another session in the hope that the market will recover so we can close our trade at a profit. Let's have a look at the results of the strategy, which are as follows. Now, the strategy was codified in 2017, about this point here. And as you can see, it has experienced its moments of ups and downs, but we can certainly say that it did, well, pretty well overall. Both the equity line short and even more the equity line long show some very interesting performances. So the open position profit has definitely proven to be an excellent ally of systematic traders. Let's also take a look at the average trade that this strategy produces. As you can see, the overall total average trade is 389 euros. Now, just to make a comparison, it would be interesting to see what would have happened if we didn't use the overnight variable in the strategy script. To make such a comparison, it's sufficient to comment on all the entries where this variable is called. And this way, the strategy will always open and close the long and short positions within the same session. And it won't hold open positions, even if the open position profit should be less than 0. Here we can see that the strategy always closes, also the long trades. Let's take a look at this. Here, for example, in this case, do you remember? Theoretically, this trade wasn't closed before. Let's take a look at the results. You see how the average trade drops? Not drastically. I mean, the strategy remains quite good, of course, but the slope and consistency of the gains decrease. Consequently, on the DAX market, and why not maybe on other markets as well, you can consider keeping your positions open beyond the end of the session, even if they are losing, because this could somehow protect our account and save us from losses that might be recouped the next day. So guys, if you want, hey, please go and give it a try too. And this is a kind of an exit that could be very useful. And as mentioned earlier, it is quite versatile and can be used in many ways and strategies. And if there is anyone among you who is interested in the world of systematic trading, I recommend that you go and click on the link in the description of this video. From there, you can watch a presentation by Andrea Unger, the only 4-time world champion in real money trading, or you can get our best-selling book, The Unger Method, by covering only the shipping costs. Or hey, you could even book yourself a free strategic consultation with a member of our team. And if you like this video, please be sure to leave us a like, go and subscribe to our channel, and click on the notification bell to stay updated on the release of all our new content. And with that, we look forward to seeing you in our next video. Until then, bye-bye.